to that big Holcim Adani deal. And we have a couple of guests joining us. But before that, let's go close to Nisha, who will tell us why Adani won the deal. Nisha, over to you.
Yes, thanks for that, Anuj. In fact, we were the first ones to flag off the issue of FEMA approval. And that seems to be one of the biggest factors because of which Adani Group has really clinched this deal and pipped the other suitors who were equally interested. So what I gather from sources with direct knowledge, and I've spoken to direct sources working on this transaction, they do suggest that Holcim was very clear that they wanted deal certainty with speed and as little approval hurdles as can be. And that's one of the biggest reasons where, remember, FEMA regulations that we had pointed out could have thrown some uncertainty and larger number of approvals. So what Adani Group did was, it was a clear structure done from an overseas family office from the special purpose vehicle, which is created completely out of the Adani Group listed companies as well as the Indian structure. And therefore, the overseas deal with Holcim really skips the entire FEMA regulation bit and a lot of other approval hurdles which could throw uncertainty. And therefore, they could structure and stitch this deal with great speed and having more certainty that the deal will go through. And that's one of the biggest deal clincher that is coming out. What I do gather is that other bidders were actually shocked when the deal was announced on late Sunday. They were not aware of this, and Gautam Adani himself traveled to Geneva, met the top management of Holcim and stitched the deal as it would be comfortable for Holcim. Remember that the valuations are also changing in a different macro environment, and Holcim was clear that we want to strike this deal at the earliest. And remember, FEMA regulations would have really cast a shadow on the pricing bit. So there again, Adani Group has paid higher than what others could have managed to pay. So from all these aspects, FEMA regulations, one of the key deal clinchers, which we were the first and the only ones to point out. What I do also gather is that Adani's dreams of building the empire in the cement sector won't end here post this transaction. There could be more consolidation.
Okay, that's the important bit, right? So there could be more buying of assets, and from a 70 million tons player per annum. As Anil Singh was saying, perhaps they could get to 100 million tons very soon. Mangesh Bhadang, the research analyst at Nirmal Bang Institutional Equities, and Rajesh Ravi, the institutional research analyst at HDFC Securities, joins us now. Both of them have been tracking this space for very long. So let's go straight to them. Rajesh, let me begin with you. I think the consensus view is that this is a win-win for the industry, or the EBITDA per ton for both ACC and Ambuja now will increase as well. But what is your view on the prices of the stocks, and in general, what should investors do now if they hold these stocks?
Yeah, hi, good morning. This deal, I believe the prices are, 380 rupees for Ambuja and 2300 rupees offer price offered for ACC. We believe Ambuja is already trading at a premium compared to its peers, both Ultratech and Shree Cement. Whereas if I look at the valuations, Ultratech is this Ambuja is trading at almost 5 to 10% premium, 10% premium over Ultratech, and around 5% premium over Shree Cement. So obviously, both ACC and Ambuja would earlier trade at a discount, and ahead of this deal, the stock have run up, and thereby this premium currently. So we don't see much upside beyond 380 rupees in case of Ambuja for sure. In case of ACC at 2300 rupees, the valuation would work out close to 11 times EV by EBITDA on ACC standalone, which is still cheaper valuation. And given that this company, ACC, has few of its ongoing expansions, or most of the expansions getting completed by this calendar year end, more visibility in terms of volume growth. So this has a better opportunity. From among both the companies, I prefer playing ACC. Yeah.
Right, got it. Mangesh, your thoughts on what happens to the stock price now that the deal is announced, change in ownership? Will they be? Do you reckon there could be a bit of Adani premium over a period of time? Maybe not immediately. And eventually, what happens? Do you think Ambuja gets delisted or continues to be listed? Your sense?
So whether it remains listed or delisted remains to be seen. I think it's too early to take a call on this. But if that is the case, definitely the minority shareholders will tend to, benefit from it. So I would ideally suggest the existing owners of ACC and Ambuja to remain invested. And in fact, if you have to take a slightly longer term view on the sector as well as these stocks, you can just imagine the kind of investments Adani can make with their expertise in their logistic as well as their coal trading experience, as well as renewable energy. I think there can be a significant scope for improvement from here on. They can streamline the structure where is basically is an interholding right now, and they can have a single entity by merging these two companies, and which would tend to give a relatively good valuation for the overall asset. So there are a lot of possibilities in terms of improving efficiencies, in terms of consolidating the industry further, as well as basically bringing in some new innovative ways which the industry may not have seen in the past. And as you rightly said, there is this Adani premium also at play, which can come into play at some point in time.
Okay.
The issue is whatever the open offer price would be, and when they do give an offer after that, acquiring such a large stake, whether they keep it listed or not. In both the cases, if they want to delist the company, I think the premium for open offer should be relatively better. If they want to keep it listed, and then probably we may not see such a high number on the open offer price. But as I said, if you have a longer term view beyond Adani taking control, I think it's a hold for me.
Okay, so hold. Rajesh, good morning. So after the deal now, what would be your pecking order among the large 5 or 6 players? How would you rank them?
So we continue to remain positive on UltraTech, which as an entity with a strong pan-India franchise and economies of scale. The company has worked significantly in the last 5 years in bringing down its cost structure and incorporating green fuel and green power in its cost metrics, and also enjoying the economies of scale. Given that the UltraTech is also expanding its footprint into the forward integration in terms of construction chemicals and all. Overall, I believe UltraTech is the even the current slump owing to the crude coal price volatility. The stock has seen a sharp pullback. I believe the valuation is most attractive in case of UltraTech. So among the large caps, we are very positive on UltraTech, and secondly on ACC.
All right, very positive on UltraTech and ACC. Mangesh, how about you? What would your pecking order be right now? And for a company like UltraTech Cement, what do you see as the way forward? Because clearly big competition has come through. Do you see them speeding up with their capex plans, and what's the way forward for the stock as well?
Yeah, so they already had a very speeded up capex plan. So they've been adding capacities substantially over the past few years through acquisition as well as through other routes. And if you look at the balance sheet, I think we are expecting the balance sheet to be net debt free from FY24 itself. So they have the, they can grow organically or inorganically in the system. And I don't think they would rush it just because Adani is entering and they might get a very large share. So consolidation is the way forward for the industry, and we may, and so that's the reason why I think it is better to look at some of the smaller companies in the space, which could be acquisition targets going forward, or because the efficiency improvement for the larger players would be such that it might be difficult for a very smaller players to operate.
Mangesh, can you give names? Which ones in the smaller players?
So if you look at the plant locations of ACC and Ambuja, you would find that they are relatively good or well represented in most of the regions barring South. So Ambuja did not have any presence in South, and ACC had fairly smaller share. So I think if they have to look at growing in this country, probably they would look at South as a region for acquisition. So there could be, and there are multiple companies in that region who could be looked. I cannot give you names, obviously, but there are certain names in those as well as Western markets which can be lucrative for this company. And I think overall, because this deal has happened at a premium, I think the companies which are at a relatively lower end of the spectrum in terms of valuation, I think there should be some traction in it.
Got it, gentlemen. Thanks a lot for joining us and taking us through this big deal. The pre-open, by the way, settled 62 points higher on that. Both Ambuja and ACC opening slightly higher. The top gainer though is Eicher Motors, up 3.5% reacting to its numbers. And the top loser is Tech Mahindra, again reacting to its numbers, especially that margin